Setting up your SMSF bank account with CBA but not sure what fees and features to expect? In this video, we walk through tiered interest rates, hidden costs, and the setup steps every trustee needs to know. Let's dive in.
All right, today we are digging into a really critical tool for any SMSF trustee, the Commonwealth Bank's special bank account designed just for you. We're going to break down what it offers, what it really costs, and how it all works. Let's jump right in.
So, let's kick things off with a big question. Is picking a bank account for your self-managed super fund just, another boring task to check off the list? Or could it actually be a strategic move that affects how well your fund performs? We're going to make the case that it's absolutely the second one.
Now, before we get into the CBA specifics, let's get crystal clear on what we're talking about. Your SMSF isn't just a suggestion. It is legally required to have its own dedicated bank account. Think of it as the foundation for your fund's operations. It keeps your super money totally separate from your personal cash. It handles every dollar coming in and out, and it's absolutely non-negotiable for staying on the right side of the tax office.
Okay, let's get into the good stuff. In this first section, we're going to pull apart the key features that Commonwealth Bank is offering SMSF trustees. What really makes it tick?
Here's a quick snapshot of the main highlights. We're going to cover everything from how your cash actually earns interest to how you can trade shares and just the day-to-day management of the account. Each one of these is designed to make your life as a trustee just that little bit easier.
First up, these tiered interest rates. The idea is really simple. The more cash your fund holds in the account, the higher the interest rate you can get. It's basically a reward for managing your cash well and helps you maximize the returns on any money that's just sitting there waiting to be invested.
Okay, for anyone who invests in shares, this is a huge deal. This quote really nails the convenience factor. The CBA account links up perfectly with its ComSec trading platform. What does that mean for you? It means no more clunky, manual transfers from your bank account to your broker every time you want to buy or sell. It cuts down on admin, and more importantly, it reduces the risk of making a silly and potentially expensive mistake.
And that smooth ComSec integration comes with another massive benefit: cheaper brokerage. We're talking trades that can start from as low as $5. If your fund is pretty active in the market, those little savings on every single transaction can really add up over the long haul.
All right, we've seen the shiny features. Now for section 2, and it's a big one, understanding the cost. Because any smart trustee knows the fees are just as important as the benefits. Let's see exactly what you're paying for.
So the headline cost is usually a monthly account keeping fee. You can see it typically falls somewhere in that $10 to $15 a month range. Now, that might not sound like a lot, but this is a constant, recurring cost that you've got to factor into your fund's annual budget. It all adds up.
Beyond that monthly fee, you've got transaction fees to think about. This breaks it down pretty clearly. Doing things yourself online, usually cheap, or sometimes it's even included in your monthly fee. But if you need to walk into a branch and get a staff member to help you, that could cost you around $5 a pop. It just goes to show that your own banking habits can directly impact your fund's bottom line.
Now, here's a really important heads up. Even though CBA might talk about having no hidden costs, a smart trustee always reads the fine print. You have to be aware of these other potential charges, things like fees for international investments, accidental overdrafts, or even just for getting old-school paper statements in the mail. Always check the full terms and conditions.
Okay, so you've weighed the features against the fees, and maybe you're thinking, this could be a good fit. This next section is all about the practical stuff. How do you actually get a CBA SMSF account up and running?
First things first, get your paperwork sorted. Trust me on this. The bank is going to need to see your fund's official trust deed, its ABN and tax file number, ID for every single trustee, and proof that you all had a meeting and agreed to open this account. Having all this ready to go before you start will make the whole process so much faster and smoother.
And here's the whole journey, laid out from start to finish. It all begins with legally setting up your fund. You have to do that before you even think about a bank account. Then, like we just said, you get your documents together. After that, it's about picking the right account, filling out the application, putting some money in to activate it, and then finally weaving it into your fund's everyday investment strategy.
Okay, let's zoom out a bit. We've talked about the how-to, but now let's focus on the why. How can an account like this become more than just a place to hold cash? How can it be a real strategic advantage for your fund? This is a game changer. The online banking tools give you a live, real-time view of every single dollar coming in and going out. This means you can plan so much better. You can see the second contributions land, you can schedule pension payments with confidence, and you can make sure you always have cash on hand, ready for that next great investment opportunity.
Let's talk about the annual audit. We all know that feeling, right? It can be a bit of a headache. But having clear, detailed bank statements and transaction histories from one central account makes life a million times easier for your accountant and your auditor. This isn't just about reducing stress, it can actually cut down your accounting bills and slash your compliance risks.
And finally, you just can't put a price on peace of mind. When you're banking with one of Australia's biggest institutions, you're getting top-tier security systems protecting your fund's money. On top of that, your cash is covered by the government's financial claims scheme, which is just a crucial safety net for your retirement savings.
So we end up right back where we started, with this one question. After looking at the features, the fees, and the strategic upside, it's really worth asking yourself, is your current SMSF bank account actively helping you run a better fund? Or is it just holding your cash and weighing you down? Because the right account, it should feel like a powerful tool, not an anchor. Definitely something to think about.